Welcome to a CNBC Africa special. My name is Arnold Kwizera, coming to you from Rwanda's capital, Kigali. Now, today we are going to have a conversation with some of the leading African youth leaders. Why do we call them the leading African youth leaders? This is according to the Leo Africa Institute, and we are having this conversation on the sidelines of their forum. Now, the conversation today is on how the continent can bounce back post-COVID-19. Yes, this global pandemic. Now, this comes in the wake of about 3 vaccines having passed stage 3, according to the World Health Organization. To introduce our panel of experts, the first one is Angela Kasekende. She is a consultant working there for various organizations. Joining Angela as well is Ralph Akorabirungi, and he is a Leo Africa Fellow. Thank you for making the time, lady and gentlemen, for joining us here. Now, quickly to dive into the issue and the question at hand, how can Africa's economies bounce back post-COVID-19? I want to start with you, Ralph, and I want to start with the issue of economic reforms. We've seen various recovery funds from Rwanda to Uganda to Senegal to Nigeria. You know, different governments initially panicking and then later coming out with measures on trying to reboost their economies. What is the right way of going about this?
Thank you very much, Arnold, for having me. Greetings to Angela again. As I said, my name is Ralph Okwebirungi. When we talk about economic reforms that we have seen countries do in Africa at the moment, we want to focus on more human-centered policies. Like, for example, the Bank of Uganda has credit relief measures that we put out to just help small businesses, these people who take out loans, to help them deal with the unfavorable impact of the COVID pandemic, ability for them to repay their loans. To repay their loans, and also to reduce the risks faced by lenders and as a result of exposure to borrowers affected by the pandemic. When we talk about economic reforms, we also want to look at the fiscal policies that are currently in place. During the COVID pandemic, you had countries, running out of money and borrowing so much money. You see, we are going into so much debt. What we need to do is to reduce that debt sustainably so that the next generations do not suffer from this at the moment. When we talk about economic reforms further, we are looking at making sure that the person, the common man, the layman, what in Uganda we call the Muntu wa wansi, is not affected by government decisions. When a government decides to borrow money, they're putting this debt burden onto the future generations. So when we talk about economic reform, we want government to understand that the debt sustainability should be put into question as well. And we also want to have more of the youth into the formal sector, into the banked sector. We have funds that are being given to the countries, but how does the common person even get this money if they do not have an account? So we're looking at getting more people, having a formal banking sector that is more inclusive, be it digitally, be it physically, but we are looking forward to having more players in the sector, in the economy, and also the private sector, getting more people involved in banking and being able to access most of these funds.
Ralph, I just want to stay with you there. According to the FDB recent report, that's of last week, they say about Africa's debt ratio to GDP is going to go up in 2021 by close to 70%. That's a whooping figure, 70%. Now, how do we mitigate this?
Well, they say once something's out of the bottle, it's very hard to put it back in. We understand that we have taken on this debt. Sometimes the need for this debt is urgent. Maybe there's not enough revenue being made. But just a thought would be, in order to reduce debt sustainability, for starters, let's stop taking money that we don't know that we are going to pay back as a country, and even personally. We should stop borrowing money that we know we might not be able to pay back. Yes, the need could possibly be great, but we need to now look at proper fiscal policy and decreasing government spending. That is number one. Once we decrease government spending, we are looking at a balance. We're looking at a balance of the budget, or even just the GDP normalizing. We need to be fiscally responsible as a country and as government as well.
Angela, to bring you into the conversation, Ralph is talking, he's advocating for economic reforms. You, on the other hand, think, we can take this on from another reform angle, and that's education. Where should we get it right in terms of education so that the economic reforms work hand in hand with the situation on the ground and the youth so that it's a long-term sustainable solution?
Thank you so much, Kwezira. So first of all, I'm actually aspiring for Member of Parliament to advocate for the youth, but most especially looking at universal vocational education. So we've been hit in the education system quite a lot, most especially in Uganda, because, we're not ready to get into the digital part of it. And a lot of our youth are not digital literate. So the fact that also our vocational training is inadequately funded, there has to be a policy in place to encourage more vocational training, because when you look at countries such as Cote d'Ivoire in this COVID time, with vocational training, it's helped the youth to be more creative, innovative, and come up with solutions, such as the COVID-19 initiative in Cote d'Ivoire, and then also young people have come up with masks, and then also different washing. Different ways to wash our hands, having different innovations. So I would say redirecting investment towards the technical and vocational institutes would be a good way to look at education, whereby you're adding a skill to whatever education that young people have and giving them a chance to, tap into different opportunities and not just limited to a particular opportunity, because unemployment has gone to a rise, and now with COVID, it's even made worse.
Angela, let's look at the practicality of the solution you're giving, right? You're talking about technical vocational education. Yeah. And, yes, technical vocational education worked. It helped many of the world's large economies bounce back after the financial crisis and World War II, Japan, Germany, just to use those two as examples. But with the COVID-19 virus, people are not allowed, there's social distancing that is needed. The number of TVET or technical vocational education needs a lot of on-learning skills that can't happen digitally. So how practical is this solution?
It is quite practical, because there are other, in different parts of Africa, they're already into the digitalization of vocational education. Like, they have online courses. However, there are some African countries that are not yet there. So there is actually hope that we can get there. It doesn't mean that, we're stuck and we can't, do something about it. So there's always a first step to get into the digital part of it, and also incorporate, IT courses or any digital courses, or also encourage entrepreneurship to come up with digital solutions during this COVID time. So we need to look at the opportunities past the COVID time and not looking at it as just a crisis.
Angela, still staying with you, when we looked before COVID-19 pandemic, Africa had, missed out on the first, second, third, and fourth industrial revolutions, right? So we were talking about leapfrogging into the fourth industrial revolution to catch up with the rest or the more developed countries. Now with that, there needed to be advanced or a lot of investment in education systems. First, why has it taken us this long? And two, could the COVID-19 crisis accelerate adaptation of education systems that are going to help us leapfrog into the fourth industrial revolution?
I would say it's redirection of investment into the education systems, it's not been in the right areas. So I would say with COVID, it's actually made us alert and also has made us see the weaknesses and also the need to invest more in our education systems. In Uganda, majority of our young people cannot access digital like online courses at the moment, so that's a problem that we'll have to look at and invest in. How are we going to make the education system more convenient for our students, that when there's a problem they can still be able to go into online courses. The other bit is also to be able to put policy in place for young people to not just look at education, but also giving them a skill, to add on to the education they have. Some of the people in Uganda have stopped in like senior 4 or senior 6. So when they have vocational training, they have a skill added onto that, and there is hope and potential for them to get some job opportunities, and also encourage entrepreneurship and innovation. Because right now, where we're heading with the shift in the economy, some of the jobs that are there right now will be obsolete. So investing in skilling of the youth in the African continent is a step forward to encouraging jobs of the future. And also encouraging young people to be more innovative and to come up with solutions for the 21st century.
Talking jobs of the future, well, government alone can't go at this in terms of having the budgets for this. They need some form of partnerships from the private sector. Now, what could be the best model to ensure that public and private partnerships prosper and help African countries and African economies bounce back?
Thanks. So now, we have always spoken about public-private partnerships. The advantages of these are endless. You have decreased government spending, you have a wider outreach of the programs, you have increased employment, you have a general development of the business sector, and you have government being a partner and a driver of these programs. The best model, currently looking at the situation in Uganda as well, is for government to realize the importance of partnering with private institutions and private companies. You have initiatives like Safe Border, you have initiatives like Rocket Health. You have people in the private space that are willing to extend these services even further than they have, but they might not have the money at the moment, but government does. And getting into a partnership with these private companies gives government the opportunity to extend service delivery, to increase the services, to increase the quality of the services that are offered to its population. And another thing is that this creates space for innovation. These public-private partnerships create space for innovation. They allow more people, more young people, to get involved in what government is doing. I have been a big proponent of people joining, the technocrat sector, joining the public sector, because we need more young people to actually be involved in how their government is run. This could be from the fiscal side, this could even just be from the policy side. So when we speak about public-private partnerships, we're asking people to join hands with government, let government meet you halfway. And you said it perfectly, government cannot do everything and be everywhere at the same time, but these partnerships can. These partnerships can allow government to extend the reach and the quality of the services. I wouldn't say there is a particular model that can just be attributed to one sector or to one country. You'll have some countries where 30% government funding, 70% venture capital funding, or even personal funding. But government creating the space, or even just reaching out a hand to these organizations to join hands and increase the quality and the reach of these services, is something that we should look at very, very honestly.
Ralph, do we have the policies in place to ensure that, if that investment, the venture capitals that you're talking about, if they come into our markets, that they are confident and trust the processes, that their investment will be protected? And Angela, feel free to jump in on this question as well.
Well, what we're looking at right now is the government of Uganda is regularly updating its policies. Now, we may not have the space at the moment for increased venture capital investment into certain companies in the country. And with a strict tax regime, that doesn't necessarily favor local investors, it could be a bit hard to get people to come in and invest. So looking at it from the fiscal side, the policies may need to be tweaked to allow, to give people space to bring in further investment, external investment, or even just to raise investment amongst the population, through seed capital and ventures. I believe that's what we need to do at the moment. I really cannot speak to the level of policy that we have regarding external investors, but I believe it's something that the government of Uganda needs to take into account, and not only just the government of Uganda, but African nations as well.
Angela, as a budding member of parliament, I'm sure you've had a look at investment policy, especially to ensure youth businesses are there. But are investors protected? Should they trust those policies?
There still needs to be a few amendments to protect the investors. At the moment, it's still, when we look at the policies that are there, they're not properly implemented at the moment. So because of, not funding, for example, now when I look at vocational education, when I look at the policies that they have in place, they have inadequate funding towards the program, so they're not implemented properly and they're not implemented effectively. So that kind of, it disorients, the programs taking place, and then also the people who are attending these programs are not efficiently trained, and it's not invested to a point where you get quality training. And let's say people from the oil sector would take on, the youth that are training in these institutes. So it's the quality of training that's lacking because of the funding, and the policy is not yet in place to, to favor this quality funding, and also to favor, and encourage, quality vocational education in Uganda, mostly, to make it free, universal and vocational education training.
Then who is going to be responsible to ensure that this doesn't become a repetitive song, that, a good policy on paper but not implemented? Who holds the policymakers to account? Who holds you to account?
So with the policy making, of course, it's the people holding us account, but then also we'll need the private sector to be involved when it comes to policy making, most especially looking at the issue of unemployment of youth. We'll need the private sector to be involved, because at the end of the day, the youth are looking for jobs within the private sector. And the issue with skilling is that there's a skills gap. People are being skilled, but they're not skills ready for the different opportunities that are there from the private sector. So the government and the private sector and the educational institutions plus the vocational institutes need to work together in order to actually come up with a policy that will be favorable to all partners.
Ralph, small businesses have bared, the biggest ban from the COVID-19 pandemic. Actually, the African Development Bank puts that estimation at about 173.1 billion US dollars in losses for sub-Saharan Africa's small businesses as a result of the COVID-19 pandemic. Now, when we look at the economy recovery funds across the continent, there has been a very low uptake of these by small businesses. at the end of the day, when you look at countries like East African Community countries, Rwanda, Uganda, Kenya, Tanzania, these economies are largely run by these SMEs. So how do we protect these businesses and ensure that these businesses go after this funding, but are also able to survive for the next 2-3 years?
All right. I think this ties into the general discussion that we've been having. You're talking about how to support small businesses, but you first need to have the policies in place. You know what Angela was speaking to. These policies and skills must be in place. After you have this, then you put in place the economic reforms. At the moment, as I spoke to this earlier, is that we currently, in Uganda at least, the central bank put in place credit relief measures. This, I said, was to protect, borrowers from, being hit by COVID and being unable to pay back their loans. By having these credit relief measures, we're trying to put people away from handout and unnecessary borrowing. You see, you have someone who hasn't been able to work, because of the COVID and the lockdown or even the curfew. Where are they going to get their money from? How are they going to feed their families? And maybe they have another loan to pay. By putting in place the credit relief measures, we, and I mean the Central Bank of Uganda, provided a moratorium for people to pay back their loans at a better rate, or even over a longer period of time, a longer tenure that was currently ordered. That was one way in which small businesses can be protected. Furthermore, I think small businesses also need to take the initiative, and government should follow up on this. They should take the initiative to enroll in such incubator programs. I see this is an area that I've seen people being passionate about. They look into skilling themselves in these SMEs. They look into formalizing their businesses in these SMEs. It will be much easier for them to take advantage of these COVID funds or even government relief funds if they are formalized, if they have their books in order, if they have a history and a track record of actually paying their taxes. So to have these SMEs formalized would be a way in which we can protect small business. Another way in which I believe, and this is personally, and also as I've seen in the Yelp discussions and the Leo Africa discussions, is government must take the lead in coming up with human-centered policies that protect these small business owners. That way we have a wholesome economy where everyone is feeding into the other. That is one of the best ways I believe we can support small businesses.
Ralph, just to stay with you, your first solution where you talk about the rates that have been provided by the central bank. But when we look at rates previously in the history of rates provided by the central bank in terms of things like the key repo rates, these tend to be laughable, being that these are laissez-faire economies, and at the key repo rate, if it's put at a 16%, you find that the practicality of that is it's 22-23% when you go to the commercial banks. So how do we ensure that even those commercial banks that lend out to the people actually maintain and follow and heed to the advice of the central banks to protect those small businesses?
That's a very interesting question, and that's a discussion that the central bank has been having since we introduced inflation targeting light as a monetary policy in 2011. The governor and the deputy governor and the bank have constantly stressed the need for the central bank rate that we put out to also reflect what is happening in the commercial banks. They need to move in tandem. This is not something that we've been seeing happening. And as you say, this is a laissez-faire economy where the governor or the central bank cannot force these commercial banks to put down their interest rates. But then we have seen that there are very many causes to this, increased overhead costs where the banks now have to put the onus and even the challenge of getting this money back onto the person who wants to borrow it. So the central bank is actively looking into a way in which commercial banks and even other monetary organizations can reduce their lending rates and repo rates in tandem with the central bank rate. I believe this is a discussion we can have at length.
Angela, unfortunately, we're running out of time, but in your parting remarks, how soon should we expect to see light at the end of this tunnel, if any?
Well, it's going to take a process, but we need to look at this as an opportunity. This COVID has really tested our leaders. It has also tested our systems, and we've seen where the weaknesses are. And I believe that once we work together, having the government, having the private sector, having the banks, and also having our young and emerging leaders, speaking for the youth out there, then we'll be able to at least step into the right direction in order to create opportunities for young people in our continent.
Ralph, in your parting remarks?
My parting remarks, I just want to say the future seems extremely bright, where you have my colleague like Angela running for office. This is something that I believe should be emulated, where you have more young people involved in the running of their country. It could be doing the public sector, it could be in the private sector, it could be like a technocrat like myself. But I do believe there's light at the end of the tunnel. We just need the right leadership. We need the right reforms. We need direction. And this comes to the heart and the crux of leadership, and why even the youth should be interested in their current leadership and the future leadership of the country.
Thank you. There you had it. Young leaders asking for other youths to participate in the policies of their countries, and also asking those already in policy-making decisions to listen to young people as a potential solution to enable African economies bounce back post-COVID-19. Our panel of experts, that was Angela Kasekende, she's a consultant, and then Ralph Akorabirungi, who's a Leo Africa Fellow. As always, I'm Arnold Kwizera, and the conversation today was the way African countries and economies can bounce back post-pandemic. You've been watching CNBC Africa. For more on this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Kwizera. Have a great rest of your day.